Guys, welcome back to the channel. Today we're breaking down a very fresh and very real update on the silver market, live price action, analysis, and what could come next for silver as of March 31st, 2026. The metal has been through a wild ride over the past few months, and right now conditions are extremely important for traders, investors, and anyone holding physical silver or silver exposure through ETFs and futures. So let's dive into the most current data and what it means. As of today, silver on COMEX is trading right around the $69.71 per ounce level after a significant correction from earlier highs that we'll talk about in a moment. Reports show that silver fell sharply in recent sessions, then posted a minor rebound. But analysts are still very cautious about the strength and sustainability of this bounce. So what's going on right now? To understand the live action, we need to start with where silver is trading today and what pushed it there. According to the latest global market updates covering March 31st, 2026, silver prices fell on COMEX this morning and are hovering near roughly $70 per ounce, with some fluctuation around that critical psychological level. Gold also weakened, showing that commodities markets are under pressure broadly. This decline comes amid crude oil volatility linked to ongoing tensions in the Middle East, especially the conflict between the United States and Iran, and the impact of that volatility on broader markets. Silver and gold typically respond to geopolitical risk, but right now the move has been slightly unusual. Instead of a strong safe haven bid, prices are retreating. At the same time, analysts are noting that silver, along with gold, is experiencing one of the worst monthly declines in more than a decade after hitting record prices earlier in the year. That sharp drop reflects traders reassessing their expectations for interest rates, profit-taking after substantial rallies, and risk-off behavior as markets adjust to changing macro conditions. So let's break this down in simple terms. Silver's price has been extremely volatile in 2026. Early in the year, we saw precious metals, including silver, soar to historic highs as investors anticipated rate cuts from the Federal Reserve and reacted to geopolitical headlines. But that narrative has shifted dramatically in recent weeks, and that shift is driving prices today. Part of the pressure comes from the Federal Reserve's more hawkish stance. For much of late 2025 and early 2026, markets were pricing in multiple rate cuts that would weaken the US dollar and boost commodities. However, those expectations have faded sharply. Analysts now expect fewer or even no rate cuts this year after comments from Fed officials, including Jerome Powell, made it clear that the central bank is not yet comfortable cutting rates. This has strengthened the dollar, which in turn puts downward pressure on silver priced in US dollars. Because silver does not pay interest, and because a stronger dollar makes dollar-denominated assets more expensive for foreign buyers. This dynamic is a key headwind for silver prices right now. Another essential technical point to understand is that silver has recently tested key support levels near $68 to $71, which have become psychologically and technically important in recent days. If silver can hold above these levels, it suggests that the market may be finding a base. If it breaks decisively below them, we could see further downside before a real rebound begins. Now, let's talk about recent price behavior leading up to today and how we got here. Earlier this year, silver's price more than doubled from levels seen in 2025. At one point, spot silver shot above 120 plusers per ounce, driven by a combination of physical demand, geopolitical risk premiums, and speculative positioning. That was an impressive surge, and it led to a lot of attention from both retail and institutional traders. But after reaching those record highs, the picture changed dramatically. The market entered a notable correction. Prices pulled back sharply, wiping out a significant portion of the earlier gains. In March alone, silver and gold experienced some of their steepest monthly declines in years. That tells us that while the rally was impressive, the market may have become overheated and set up for profit-taking and technical retracement. Now we're seeing silver hover near key support. And this is where the current live analysis becomes critical. From a technical standpoint, most traders are watching $67, $68 as a major support zone, with resistance clustered near $71, $72. If silver can maintain support and break above resistance, it could signal a consolidation or even a renewed push higher. But if it breaks below support, we may see deeper moves downward. Market participants are also watching economic data and key events this week, including speeches from Fed officials and employment numbers, because these will influence expectations for interest rates and the dollar, which in turn influence silver. So let's discuss the why behind these moves. One of the key drivers in this current phase is the shift in market expectations around interest rate policy. Earlier in 2026, traders were pricing in significant rate cuts, moves that would typically weaken the US dollar and support commodities like silver. In that environment, precious metals thrived. But recently, the Federal Reserve signaled a more cautious approach, indicating that inflation remains a concern and that rate cuts may not be as imminent or as significant as expected. That pushed the dollar higher, making commodities less attractive in the short term, particularly silver, which is sensitive to dollar strength. Another driver is industrial demand and recession concerns. Unlike gold, silver has a large industrial component. A big chunk of silver demand comes from manufacturing, electronics, solar panels, and other real-world uses. This means that fears of slowing economic growth, especially in major economies, weigh on silver's price in a way that they don't for gold. Now let's shift to the directional forecast. What could happen next in the silver market? Right now, we're at a crossroads. If silver holds above the current support levels and the dollar shows signs of weakening, we could see a rebound that takes silver back up toward the $74, $78 area, and possibly beyond if macro risks ease or if rate cut expectations revive. Traders will likely see any break above $72 as bullish in the near term. However, if the US dollar continues to strengthen and the Federal Reserve remains hawkish, the downside risk could continue. In that case, silver could push below $67 and retest lower technical zones, perhaps even extending toward $62, $65 if selling pressure intensifies. For long-term investors, it's important to separate short-term volatility from structural fundamentals. Silver's industrial demand, especially from sectors like solar and electronics, remains strong over the long run. Moreover, structural supply issues, for example, limited new mined silver and unique production dynamics, could support price levels over time. These aren't short-term drivers, but they matter for where silver could be headed in the coming years. That said, short-term price behavior will depend heavily on macroeconomic data, interest rate expectations, and broader risk sentiment. For example, if upcoming employment data or inflation readings trigger renewed expectations of rate cuts, we could see a strong rebound in silver. If the data suggests the opposite, that inflation is persistent and the Fed will keep rates elevated, silver may continue to struggle. So what should traders and investors be thinking about right now? For traders, key levels matter. Maintain a close eye on $67 for support and $71.72 for resistance. A breakout in either direction can signal the next leg of the move. For investors holding physical silver or long-term positions, it's important to stay patient and consider the broader trend, which includes the potential for demand growth from industrial sectors that don't rely on rate cycles. That kind of demand can support prices over a longer time horizon, even if volatility hits in the short term. In summary, today's silver market is shaped by retreat from earlier record highs and a significant correction. Price trading around $69, $71 per ounce, a key technical area. Hawkish monetary policy expectations, keeping the dollar strong, industrial demand trends, and macro risks adding complexity. The next directional move will likely be driven by macro data, especially Fed policy signals and economic indicators, as well as how markets interpret ongoing geopolitical tension and risk appetite. That's your live silver market update for March 34, 2026. If you found this video detailed and helpful, make sure you smash that like button, subscribe if you haven't already, and turn on notifications so you never miss an update. Drop a comment and let me know whether you think silver is heading back up or breaking lower from here. Thanks for watching, and I'll see you in the next video.